What is up, everybody? Welcome back. What is up, everybody? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Happy Friday out there. We made it through a boring week in Bitcoin. We're going to go over a few things here to wrap up the week. I have done a couple blog posts. We'll quickly go over those. We'll go over price for macro, including Bitcoin. So Bitcoin, dollar, US 10-year, oil, S&P 500. And then we'll take a look at a really interesting development going on right now with political donations and Bitcoin. But let me share my screen and get right into it. So this is bitcoinandmarkets.com. Check it out. You guys can sign up to be on the email list and you'll get no spam. It's just all of my content that I put out. And I've been pumping out a lot of content over the last little while. But actually, before we do that, let's jump into the chart. Let's do that instead. So let me pull that up. And still getting used to this new interface on Restream. Try to make this chart as big as possible. See how this is working. Okay, this is Bitcoin. This is the 50-day moving average. And you can see the last 3 days have just been bing, 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 bang, bong, bong. I saw an awesome meme today about Austin Powers when he's turning that little car thing around in the hallway, and it's just 59, 60,000, 59, 60,000. That's what it feels like. And if you go back, to the earlier parts of August, I mean, we've been here. You could go back to the beginning of July, and we're at the same position. So this week has been pretty boring for Bitcoin. No major announcements that will be affecting the price, or Michael Saylor didn't announce he's going to buy anymore. There's no imminent litigation going on. So lots of this stuff is just a boring time in Bitcoin. But this is where we make the gains, right? You buy when, or you hold through all times, including the boring times. People that don't study, they don't dig deeper during these quiet times, they're probably going to end up panic selling in the future. So you always get the Bitcoin that you deserve. You get the gains that you deserve. It's not easy to hold Bitcoin long term. Unlike that other popular meme where most people think that it is just an easy hold as you're riding this bike up a nice minimal slope, and then you get big gains. No, you're going through shark infested waters. You're walking a tightrope. You're doing all these other things to get to those gains. And this goes along right with that. Boring times in Bitcoin. Okay, so that is the Bitcoin chart. Let's bring up some other macro stuff. The dollar. And I've talked about this recently down here at the bottom, and I did point out that we had a double bull div. If I bring up the divergences here, and actually a triple bull div after I made this comment, we did end up having a triple bull div, and you can see what's happened to the price. I mean, a lot of people always say that the dollar is going to die or whatever the case is. It's oversold. It's going to bounce. I saw a tweet from Max Kaiser today that was saying, oh, the dollar only has 6 months left to live. I mean, it's such a joke. It is such a joke. The dollar is going to continue to get stronger, most likely. I mean, in the very initial phases of a recession, in a panic, the dollar might sell off. But throughout the next several years into the next decade, the dollar is just going to get stronger as credit creation and credit ceases to work as well. So people, as with diminishing marginal returns on credit, let me just get this out of the way, diminishing marginal returns on credit. So as you add more and more debt, each subsequent unit of debt is less productive. And so it takes more debt to get the same amount of gains. And so as you get towards the end of a credit bubble, you're having to add go exponential on the debt just to get a little bit more growth. However, if you're going exponential on debt, what is happening to the debt burden? The debt burden is also going exponential. And then somebody has to pay it. Either the borrower or the lender will have to pay it. If you have a default, the lender pays it. That's what happens. So there's as debt goes up, there's more demand for dollars. That's just how it is. And so the death of the dollar is going to be deflationary, not inflationary. The Fed losing control is deflation. That's when the Fed loses control, because the credit-based system is imploding on itself and we're going through a credit bust. So anyway, this is what's going on with the dollar. Pretty interesting to see this bouncing, right after I don't talk about these things unless we get towards extremes. Okay. So when I see extremes and I see some bull divs happening, that's the time to talk about it. Like, hey, we're turning around. And you can see, if we zoom in here, this is the daily chart, but if you zoom in, and let's take these divs off, it's made a higher high here. It's actually broken out of this downward sloping or this descending pattern. You don't see that anywhere else. I mean, maybe you could say this was slightly, but it was not on any significant move. Okay, so all the way here from June to today, this big sell-off, this is the first real break in this pattern. So very interesting. And let me make this bigger for Telegram. Sorry, guys. Okay, so that's the dollar. Let's go to next. I have US 10-year. Well, let's flash here. Let's flash to the JPY. Holding this bottom. I mean, this is getting stronger. So going down here is the yen getting stronger. So this is weakening. So this is what we'd expect with the dollar getting stronger. We'd expect this to be rising. And that's what we see here. And the Chinese yuan, look at that. That's continuing to get worse, actually. And I'm live streaming, buddy. Yes. Sorry about that. So here we have the Chinese yuan, and it's continuing to get weaker. And I think some of this talk recently about the Japanese economy, the Japanese banking system, the carry trade, and all that, they are very exposed to the Chinese yuan. And so these currencies are a lot closer linked than what most people think. So I watch those consistently. But anyway, okay, let's move on to the US 10-year. And this multi-month low is holding for now. I will be watching this very closely as we go into Q3, which is a seasonality thing. That is, the end of Q3 is pretty much the most volatile time. It is a period where yields tend to rise going into the end of Q3. However, I do expect a recession to hit at some point in the near future, medium term, maybe about 3 to 6 months out. And so in a recession period, you're going to see yields falling. But if we zoom out here on, let's just go the weekly to give you a little bit better view of this, get rid of this. But okay, so if we look at end of Q3 here, right here, this is end of Q3 in 2022. This is end of Q3 in 2023. You can go back here, this little spike, see how this rise happened here. This was end of Q3 in 2021. So end of Q3 does tend to see yields rising, and this is due to many things seasonally. And I've written a post about that. I actually linked to that in my post I wrote today, which I included a discussion on seasonality. But if we go back here to the daily, I talked about this being a multi-month low because it was so oversold, particularly the US 2-year. If we bring the US 2-year up, it hit a 12, which is extremely, extremely oversold. And so I thought that this was going to be a significant low between 6, maybe out to 10 weeks, something like that, this low might hold. But anyway, that's what's happening there on the yields. They are not uninverting quite yet. If we go to the US 2-year, 10-year cross, and we take this to regular, getting ever so slight here, very, very close to this of uninversion. And you can see they did intraday, they did uninvert here back on August 5th. And they are very, very close. But people always watch these uninversions because they happen right before US recessions. So if we put this on, let's do a weekly, and I have the recession thing on, and you can see in 2020 we inverted, then we uninverted, and then we had the recession in 2020. If you go back to the great financial crisis, we have this uninversion right before recession. Same here in the .com, same here in the 87, late 80s recession, or this would be 1990. So this is uninversion, and then the recession starts. So this is pretty time tested, and people are expecting this to lead to another recession here. Not be a causative factor, but this is a sign. Looking holistically at the market, this is one sign that you can rely on, is the inversion and uninversion of yields leading into recession. Okay, let's go back and take a look at oil. One of my favorite markets to look at. You guys who are followers, you'll know that I have talked about this ad nauseum over the years, and I have been expecting generally weaker oil. The latest news from OPEC is they've extended this 3.6 million barrels per day cut until the end of next year, but 2.2 million barrels of their total cut. So yes, they are right now, they have 5.8 million barrels per day in production cuts, and the price is still weak. So anyway, 2.2 million barrels per day in those cuts are set to end coming up on next week, the beginning of September. So we will see what happens to the oil price. But you can see just weak. It just continues to be weak. Okay, weak lower highs. Now we're starting to get some lower lows. It just does not look strong really at all. Overall, I think, with demographics and with a global economic slowdown that probably is going to last about a decade, we're going to see massive declines in demand for oil at certain prices. So, for example, at $80 a barrel, the demand is going to decrease. At $70 a barrel, the demand is going to decrease. For a market clearing price to be found, it's going to have to go a lot lower. I'm thinking in the 50s, maybe the 40s, depending on what happens with these production cuts, what happens when Trump gets elected and he drills and really gets the pipelines going and all of that. Also, when some of the embargoes on Russia are lifted, most likely under Trump, what is going to happen to the oil price? Supply is going to go up while demand is stagnant or going down. The price of oil is going to go down. So that is what I'm expecting there for the price of oil. And by the way, guys, I am live streaming on YouTube, Rumble, Twitter, and Telegram. If you're watching on Twitter, jump over to Rumble or YouTube and like, comment, subscribe. I really, really appreciate that. When you subscribe, you help the channel grow. When you like it, you feed the algorithm to actually get it out to some people. So anyway, trying to get to 1,000 subs there on YouTube and monetize the channel. But I appreciate everyone that does subscribe. Put your comments down below. I think you can comment as well on Twitter. So put your comments there, and I'll check those in just a minute after we go over the S&P 500. So the S&P 500, if we go the daily, I mean, guys, this is crazy. So remember this just a couple weeks ago. I was live streaming. I'm saying, this is panic. This is oversold. I wrote about it. This is oversold. We have the 10-year oversold, the 2-year oversold. We got all these market conditions screaming oversold, oversold. I called this on the day, pretty much towards the end of the day, that this was oversold and it is going to bounce. And all-time highs are very soon. I actually said all-time highs in the S&P 500 were likely to be happening soon. But the Nikkei was not. Remember, that was with the scare from the Nikkei. So if we go to this one, this is not my chart. Though. Hold on just a second. I have all these lists. Okay, NI225. And we are back over the retrace here. You can see this is a Fibonacci retracement. Back up to all-time high. So it's over the 61.8 retracement. We can get rid of that. Far from all-time high. So that's much different than the S&P 500. So let's go back to the S&P 500 and you can see this. Okay, so getting very close to this all-time high. Is this going to be all-time high close? No, because the all-time high was actually on the close, which is pretty cool. But if we go to the weekly, you can see that this is going to be another high close week. So last week actually was not a high close, just by a few points there. But this week has a nice long wick on the bottom, which tends to mean that buyers are overpowering sellers. And so that is a nice long wick. And we're going to close at a fresh new weekly close high. So that is very, very strong for the S&P 500. And the reason why S&P 500 rallies into these recessions is because of a couple of reasons. One is passive flows. So people are investing out of their paychecks, into their retirement accounts, and those things go into the stock market. And if they're not going to be like investing in other things because the economy is so bad, that's still going to come out of their paycheck as long as they keep their job in a recession. But if you keep your job and you just keep pushing into your retirement account, the flows are going to come in. The passive buy pressure is going to come into the S&P 500, and it's going to outperform. Also, if you're tightening your belt and you're like, I need to save some more, let's not go on our second vacation this year or whatever the case is. Let's put that money, whatever that 5,000 or 10,000, whatever we're going to spend on that vacation, and we can put it into our retirement account or into savings. And so that gets plowed into the stock market as well. So during these periods, you see this as the stock market rallying during this time. Of course, then once recession does hit, imminently before the recession hits, you'll start seeing stock market sell-off. Historically, if you go back and check out other periods moving into recession, and we're just kind of waiting for that to hit. We're waiting for the imminent, right before recession starts. We're waiting for that to hit. Maybe that's going to be September, because we have Powell starting to cut rates, which is also not a good sign historically going, versus recession. The Fed tends to cut as we're going into recession. And so, we could see a new all-time high in the S&P 500, followed by a quick turnaround and larger sell-off. But overall, right now, the bull market, the bull trend is maintained. I mean, you can see on this higher highs and higher lows. It's pretty simple, up and to the left. When we start getting some lower lows, now we can draw a line in the sand and say, okay, if we break this level right here, which, let's see how much of a move that was down. So if we fall 9% for the S&P 500, make a lower low, then we can start talking about recession and the whole trade, this whole trade that I've been talking about for over a year of bullish stocks, bullish Bitcoin. We can start talking about that a little bit different. But okay, if we go up here, just make a marginal new high, and then start coming down, and we do break out of that. And let me change this end here to an arrow, and we do break out of that, then this could be a significant high. So that's what I'm kind of watching for stocks. Let's go back to Bitcoin real quick. And we're pushing up a little bit here, trying to get out of 58,000. Let's go down to like the hourly. Yeah, we're trying to close the day up here out of the 58,000, 59,000. Expiration for the options was max pain at 61,000. We did not close there. We did touch it here a couple days ago, yesterday actually. But anyway, okay, that is the price charts. Let's go to my blog post now. Oh, by the way, guys, I am also publishing here on, let me see if I can pull this up now. Okay. I am also publishing here on Substack. So if you guys want to join me over here, and you can subscribe here instead of on the actual website, but you guys can check out that Substack. I'm trying to do all the exact same content. There's going to be a paywall for the premium content, but for the free stuff that I publish on the website, it's going to be on Substack as well. Okay, let's go to the website, bitcoinandmarkets.com. Check out some of the stuff I have released over the last few days. I did not do a live stream on Wednesday, but it was been a slow week. So this was the premium content, went out, all eyes on September. So I'm building this. The last premium one before this, I was talking about a critical juncture for Bitcoin. This is becoming a critical month for Bitcoin. So I'm building that narrative here. And then this one came out yesterday, Bitcoin cycles and U.S. presidential elections. You guys might have seen this chart floating around on Twitter. And it's convincing at first glance. But then once you start thinking, hey, these aren't exact. Why is this one earlier? Why does the green one spike earlier than the blue one or whatever? It's not like a perfect thing here. And so I say, do presidential elections really drive Bitcoin prices? So then I created this chart with the U.S. election. So back in the first halving, it was in November. So the first halving was in November 28th of 2012, same year, same month as the presidential election. However, the next halving moved all the way up, almost 6 months. It looks 5 months to July in 2016 was the halving, and the election was spaced out right there, by what is that? 4 months later. Then we have May in 2020. It moved up again a couple months. So we have May to November, so 6 months there. And this time we're in April. Still election year, but we're going on to 7 months before the U.S. election. So we should be able to see some differences if it's the election or if it's the halving, right? That we should be able to tell. And upon closer inspection, you can clearly see that the green 2021 line is shifted slightly to the left of the blue line. This is because the halving occurred earlier. So you can see if I put the halvings onto this chart, then this was the 2016 halving in May, then in the 2020 halving, and then this year's halving in April. You see that corresponding shift from blue to green here, matching the halving shift. And then if we extrapolate from this, we say, okay, it's going to shift a little bit. We can see that this is going to be happening for the price here. So this is just a projection from this, but this is not clear that the elections really have much impact at all. This one might have more impact because it is Trump, and the Bitcoin has been a major topic for this election season and policy will be huge. So anyway, very interesting here on this. I talked about the separation of the halving and the US election might have some indirect impact on Bitcoin's price, leading to an early significant peak before the halving. We observed this pattern both in 2019, remember this, and 2023. So it's like kind of a double cycle, two-year cycles within a larger 4-year cycle. But just interesting to see as we spread out here from the election, it's kind of pulling some of these forces, stretching out. If you just think of like stretching this chart out, it's going to separate some impulses, right? Where we had pretty much one impulse with all these little mini tops and pullbacks along the way. But as you stretch this out, because some couple significant events are being stretched out, then you could see double tops form or two individual impulses. So that's kind of what I'm showing here. Just thinking outside the box. So if we follow the halving timeline alone, the price should start moving up and be well above the current all-time high by this election. So by November, we should be above the all-time high, potentially reaching as high as 100K before the election. However, if the true driving force is a combination of the halving, supply squeeze, and the US elections, then stand by. All right, guys, sorry about that. This is the plight of a dad with the kids coming home and all their friends coming in, ringing the doorbells and all that stuff. But okay, we are back on this. And where was I? So a combination of the halving supply squeeze and the US elections, then the price would remain relatively flat without a major breakout until after the election. So what am I saying there? If we say that the election really is important, it's probably going to follow more flat trajectory here until the elections. However, the halving is the major driving force. We should see an all-time high before the elections. So that's what I'm saying. And as we go forward, we can kind of check ourselves on all these things. But okay, that was this post. And before I go on to the next one, let me take a look at the chat. Dex Invictus back with us. What's up? What's going on? Carry trade starting to resume, hard dollar getting stronger heading into 25-50 basis point rate cut. This is from Raphael. Yeah, I mean, I'm not a big believer that the carry trade was in much danger. I've heard that from a lot of people, but a $20 billion trade doesn't get unwound in a week. I remember watching on Zero Hedge, there's a couple articles like Morgan Stanley analysts say the half of the carry trade is unwound. That's kind of ridiculous. So no, I don't think the carry trade, I mean, you might have seen 1 or 5% of the total volume of the carry trade get unwound, maybe, but it wasn't really that significant. They don't have a choice. Okay. They're going to do it. Japan's going to go back to zero or negative, and the U.S. is going to follow suit. I mean, what was this carry trade doing when U.S. rates were at zero and Japan was at negative 10 basis points? So I don't really buy all that it's that sensitive. Okay, the Fed is not in charge, and the uh, the market is going to do what the market's going to do. Uh, it will unwind if it's going to unwind, not because of what the Fed does or what the BOJ does. And so, no, I'm not a big believer in this carry trade being unwound. They can always find a place for it, you know. But one thing to actually talk about what could affect the carry trade is the lack of Chinese investment. So, China having a hard time. Um, their economy is in free fall. They are absolutely in recession, even though they say, we're growing at 4% or 5% or whatever they say. That's a complete lie. They First off, the way that they count GDP is different than the way the West, the United States, counts GDP. So US counts GDP as output, gross domestic product, right? What was sold on the marketplace. If prices drop because of bad, retailers had to start dropping their prices and things, that affects the GDP. And China doesn't calculate it like that. It's not gross domestic product. It's actually gross domestic dictate. So they dictate what they want the local governments to do. Build a bridge to nowhere. We want you to spend 80 billion on a bridge to nowhere, and we're going to count that in GDP. So they are mandated a certain GDP level. And on top of that, their books are cooked at different levels. I'm not saying Beijing necessarily is like, oh, we're going to tweak this, we're going to tweak this, but some local province is going to say, we got to tweak this, guys. We got to make this look better. And they just report that up at multiple levels, and it just gets extremely out of sync as you go up the chain. And by the time that the national government reports their GDP, it could be 5-10% overstating. So this is they're definitely in recession. 100% China is. And so if there is a carry trade that's going between Japan and Chinese investments, Chinese bonds, corporate bonds, or even government bonds, that could be being affected as well. So it's not all about the U.S. rates versus Japanese rates, dollar versus yen, but I do get what you're saying. And we'll just have to watch how it develops. I mean, I could be wrong about this. I don't think I am, but yeah, that's what I had to say. Great comment though. Happy Friday to you too, BTCP. I thought the August sell-off was started from margin requirements changing for index options. Dex, what are you talking about? Are you talking about the Japanese sell-off or the stock market sell-off? I'm not following on that. I must not be clued into what you're talking about there. Okay, let me check the Telegram comments. Green, that's sick. Oh, probably talking about our pregame show there on Telegram. Yep. Happy Friday, Dave S. What's the congrats for? Oh, I will let you know their point. It's 1,000 subs on the website. Yes, I have been accepted as a contributor for Forbes, so I will be also starting to write for them. I'm not sure when my first piece will come out, but it is just to get my name out there and all of that stuff. So be watching out for that. Barron said, "What did I miss?" Talking about Ansel getting a spot on Trump's economics board. Yeah, I wish, man. I wish. I did study under some pretty significant economists in university. I think 3 Nobel laureates. And it wasn't like a Ivy League school. It was just Iowa State University. But I think we had several former faculty members that were presidential, um, economic advisors, and also Nobel laureates. So it was a pretty good program, pretty good shop. But anyway, okay, let's go on to where was I? Where was I on our trip here today? We're going to go into this one. So this one is very, very quick, guys. Bitcoin's historic performance in Q3 and what to expect this year. So we have this chart. You can find this. CoinGlass has it. Let's see if I have it easily accessible. But CoinGlass has this, guy, so you can reproduce this yourself or check out theirs. I did add this bottom line just for helpful gauge, but you can see Bitcoin monthly returns. And August has been historically poor. There have only been 4 positive months in Bitcoin's history, in this from going back to 2013. I understand Bitcoin had a price before that, but this is what they have. And September, there's only been 3 Septembers in the last 12 years that have been positive. So we're leaving August, going into September, and this is a very, very poor time for Bitcoin. But there are some glimmers of hope. One is that the declines aren't really all that bad. So like if we go over here, we could see some of the average declines. 34% here in December. Let's see, 36% was the biggest in November. If we come to some of these other 35%, 37% here in May and June, we have some bigger declines. Okay, but in September, there hasn't really been any big declines. The biggest decline is going all the way back to 2014 when we had negative 19%, nothing over negative 20%. Pretty much the last several years, it's been single digits negative. Bitcoin can handle that no problem and continue to rise. But anyway, let's read this post a little bit. So currently, we approach the end of this month, 2 days. The open was 64,612. Don't think we'll get back there. It's actually at negative 8% and not this negative 0.68%. But additionally, Q3 stands out as the worst quarter by far. Only 5 out of 12 years have shown positive returns for this quarter. So if we go here, see Q3, these are quarterly returns. Only 5 since 2013 have been positive. However, another glimmer of hope here is if you look at halving years. So the halving years, actually, the Q3s following halving years. So when was the halving in 2012? You guys remember from looking at the chart just a few minutes ago? It was in November of 2012. So Q3, the next Q3 is actually this Q3 right here in 2013. So 40% after this halving. Then the halving moved here, to May. And so the Q3 following that halving was negative 9. But then here in 2020, we had again another early halving, and the Q3 was 18% in that halving year. So this halving year, will Q3, that's 2/3 of these halving Q3s have been positive. Are we going to see another positive year here for Q3? Now, what that means is September has to be pretty darn good. If we go back here, September, the largest gain in September is 6%. So it has to be more than that. We had to get to be 20-25% just in September alone to start pulling us back up for the entire Q3. Let's see if I go to the chart again real quick. Let's go to the quarterly chart. So 3 months. Whoa. Okay. And we put this back to the beginning of Q3. So now for Q3, we're negative 5% only. So there you go. Q3 has been so flat that we're only at negative 5%. So now if we go back, and let me just see the open. Where did it open? It opened at 62,676. Oh, that's very doable, guys, to close September above 62,000. We would have a positive quarter. We would have a positive quarter. So now if we go back here, again, September, if we just go like 6% or 10% up in September, then we would end up having a positive quarter. This is pretty cool. We're going to have a positive Q3 moving into Q4, which would be very strong. If you see here, every time we have a positive Q3, this one wasn't so good. 2021, 2020, we had a positive Q3 and a very nice Q4. Here, this one, 2018 wasn't so good, but we're talking like halving compared to the halving here. These would be closer to that. And we have here positive Q3 and a very nice Q4. And again, here 2013, positive Q3, very good Q4. So this could be kind of what we're looking at here. If we turn positive for Q3, closing above, say, if we get to 63,000, which I think is pretty darn easy to do, but if we get to 63,000 by the end of September, then we'll have a positive Q3, and that is typically followed by a significant Q4, especially in halving years. You can see 2020 was a halving year. 2016, this wasn't positive, but this one was, and it was significantly better. And then in 2013, which is the year following the halving, again, very significant. So that's a good sign for coming up in the end of Q3 and into Q4. So I say that it's worth mentioning that August and September are also generally difficult months for traditional markets due to seasonal effects. I explained why in a post, but seasonality significantly impacts major market movements, especially at the end of Q3 when most crises occur, and to a lesser extent at the end of Q1. This trend is seen in banking, where loans and interest rates peak around August or September, and that's also due to the seasonality of lending. Okay, people, lending tends to be more at the beginning of the year and taper off towards the end of the year, and that like passes a critical mass around the end of Q3 when the rubber meets the road there for banks, and so that's the seasonality for banking. Loans and interest rates peak. The government spending also aligns with the fiscal year ending September 30th. So the U.S. government's fiscal year ends September 30th. There's all sorts of stuff that happens around there. Government contractors might put their fiscal year to align with their main contract, which would be the U.S. government. So we have a lot of end of fiscal year stuff around the end of Q3 as well. And we also have an agricultural cycle. So of course, harvests that end around Q3. A lot of futures and options trading are settled around that time. So that's why several reasons why that Q3 is a seasonal time we should pay attention to. Okay, the thing I'll give you on the post to consider: shifting earlier of the halving. We might expect the gains traditionally seen in Q4 to start materializing earlier as well. So remember, we were just talking on the last post how the halving has been shifting earlier in the year. And that could, if that's affecting the price, then we could see some of the rallies that typically happen in Q4 start happening later in Q3. So they start hitting earlier. And so Q3, again, it looks like it's going to be positive this year. Maybe some of that Q4 energy will come into Q3, so we could see some big moves here in September. But September is shaping up to be a very, very critical month, not only for like the near-term price, but for the cycles in general. Like, are we still on a 4-year cycle? Are we on 2-year cycles now? Are we, what is truly driving price? What events are really, really important to price? Is it still halving, or is it U.S. elections, et cetera, et cetera? So September is shaping up to be this month where we can really get a lot of insight into some of these fundamentals that are pushing on the price of Bitcoin. But that's that for that post. Okay, let's just go back to the home page. I'm going to try to find a tweet that I saw about the political donations, but okay, let's take a look at some of these chats. Dex Invictus, you said, okay, so this is from the August sell-off, starting from margin requirements, changing index options. I mean, it sounds vaguely familiar. I had to go back and look at some, what happened around that time. But you're saying this has to do with carry trade unwinding. I'll have to look into that more. Oh, Brett Johnson was saying something about it. Yeah, I mean, if they did change some margin requirements in Japan, then it could affect the carry trade. But it's such a gigantic market. If it is unwinding, we would know about it. It wouldn't be just a flash in the pan over 3 days and then it's over. Did you watch the latest Trump ad? It's about Kamala debating herself on economy touting Bidenomics genius. I probably have seen it, but I've seen a bunch of them on Twitter there. They are good. And they make themselves. I mean, they don't even have to really spend money on ads. I saw that the ad spend so far was like 180 million for Kamala and only like 23 million for Trump or something, because these ads just make themselves. And he's putting them out on Twitter and on Truth Social and those places, just getting more bang for his buck, and they make themselves. But okay, let me try to find this tweet. Let's see if I have it pulled up on the other one here. Sorry, guys. If you are watching on Twitter, jump over to YouTube and Rumble and subscribe, please. Comment there. Helps me grow the channel, get out quality content to people. Over the years, I have never sold a scam and have, helped people become Bitcoin only. Okay, let's see. Trying to find you guys might have seen it, but it is the political donations right now looks to be up to over 50% coming from Bitcoin or crypto people. And that's pretty significant because, in the past, we've heard all of these theories about, the military industrial complex, and how they have their lobbyists. And so we always go to war because lobbyists make the will of those lobbyists done, those businesses done. We have banks that have lobbyists and get everything passed. And there's all these theories about this. But now, if the quote unquote crypto or the Bitcoin sector is being the largest sector with political donations by far, what's going to happen then? I mean, the lobbyists, these are lobbyist type dollars, and they're going to be used to make friendly Bitcoin regulations. And so anyway, I just thought I'd point that out. If you would ask me 10 years ago if something like this would happen this soon, I would say no way. They would still be fighting Bitcoin hard. We would probably be doing some cypherpunk underground stuff now with ham radios, or swapping open dimes. As I thought for a long time that open dimes would be very popular because you could put a Finny on there, a 10,000th of a Bitcoin, and you could have fixed denomination open dimes and trade them like coins, basically. And I thought that that's what we'd have to be doing on the underground because they would be cracking down so much on Bitcoin. But now Bitcoin is the largest contributor to the campaign donations, becoming major lobbyist industry. And so I think that's all good for Bitcoin. But okay, let's check this out. Any more comments, guys? It's Friday. We're about to bounce out of here. Let me check in on Telegram. No new comments there on Telegram. Okay. So, guys, I'm going to end it there for today. Hope you had a great week. Hope you have plans for the weekend to spend time with friends and family. That's what's really important out there in life. I always say get out there and touch grass, but find excuses to go and spend time outside, especially on the weekend, and hug somebody that you love. I will be back here on Monday. I will be also hanging out in the Telegram pretty much 24/7. So if you ever want to contact me, you can do that in Telegram, t.me/Bitcoin and markets. All the links should be down below on YouTube and Rumble. And yeah, so hope you guys have a good one. See you on the next one. Bye.